Alright guys, so now that we know what the advanced breakout is, we learned in the previous lesson, now we're going to be focusing on the entries, the stop loss, and the target for the specific strategy. It's very simple. You know, there's not many different entries or many different stop loss placements or many different targets for this specific strategy, okay? Strategy is great the way it is, and there's not much discretion around it when it comes to the entry, the stop loss, the target. You know, there's very specific criteria that is required to execute the strategy. Okay, so with that said, let's dive right into it. Okay, so let's dive right into focusing on the entry, the stop loss, and the target for the advanced breakout strategy. Okay, see you guys on the charts. All right guys, so in the previous lesson we looked at the ASI yen trade. Okay, and let's go over it quickly one more time, and then I'm going to really focus on the entries and targets and the stop loss and all of that. Okay, so with that said, let's have a quick look at the daily chart. And what's the first criteria for an ABO? You need to have major support or major resistance. Okay, period. So we have that. We do have major resistance here. This resistance goes back quite a bit as well. As you guys can see, pretty decent rejections overall throughout the years. So it is major resistance, so that is good. That criteria is met. Second thing that we need is, in this case, you can also see that we have major resistance on a weekly chart, you know, same thing. And you can also see that we have double tops on a daily time frame. A lot of times you're going to be playing this pullback as well with an ABO if there's a setup, you know, or like this pullback right here. If there's a setup right there, that can be taken. So a lot of times it will be also these overextended runs that once they hit major resistance, you'll be going short, you know, so just know that that's also possible. In these overextended runs, hits resistance, you're going to go short. In this case, this overextended run, if there was a setup, that could have been a short. In this case, it was a double top, but these overextended runs are okay as well. So in this case, we have a double top at that major resistance. Next thing, okay, understanding that there's not going to be a reversal candlestick. That reversal will typically form after the trade has been taken, okay? So the next thing that we need is we need to make sure that because we don't have that reversal candlestick, so we need to make sure that what? A run is a trend and a trend is a run. So we need to, if we believe that a new run will be happening, that this level is going to be rejected, we need to make sure that what? A trend on a lower time frame is developing, or we have bearish price action in our favor, that a trend is coming to an end. That's the most important thing, because with an IBO, with the initial breakout, you're going to have trend. The trend has already been developed. With a CBO, it's going to be fully developed. With an ABO, it's going to be developing. It's going to be at the end of that initial trend, and then you're going to be looking for a price action pattern at that major resistance that we saw on a daily chart, showing you deceleration. Okay, that's the most important thing. At that major resistance, you need to have a price action pattern such as this one in the 1 hour time frame showing you deceleration. Okay, then the next thing is you need to make sure that the 4 hour chart is also kind of overextended, rejecting that resistance with deceleration, candlestick formation, right? And then enough room down to that 4 hour 50 EMA so that you can get your 2%. 2% reward risk ratio is key for this strategy. Okay. And then last thing is momentum. You got to be trading it during high volume. At least you don't have to, but it helps. You know, sometimes you might want to take a low volume position if it's just perfection and you have like an amazing high test reversal or something, right? But high volume are nice because that's going to give you the strongest momentum. Okay. So high volume is important. And then you're just waiting, being patient for that rejection to happen and that 5-minute break to the downside. Okay. It helps when you're waiting for a decent candlestick formation as well. And remember, you can be patient with this. Why? Because if you're not happy with what the advanced breakout is telling you, what are you going to have next? You're going to have an IBO. If there's no IBO, what are you going to have next after that? You're going to have a CBO. So just know that if you don't have what you want to see in the setup, be patient. Sit on the fucking sideline, you know, and then just know that once it breaks out, sure, you might have missed a move, but you're still going to have an opportunity to get into the trade with an IBO or a CBO or both. You know, sometimes you're going to be able to catch them to catch all three. You know, there were cases where I caught an ABO, then I took an IBO, then I took a CBO, you know, literally, because this is how these strategies are designed, so that you're literally playing that daily run or playing that high time frame run. So this is kind of what you need here, right? You can need all those confluence factors. So now with all of that said, let's jump back. You know, I'm going to jump back in time here to the entry point and kind of go through it step by step with you guys, how the entry looked like, okay? So here we go. We're sitting at the highs on a 4-hour chart. Let's jump back to the 1-hour time frame at that point. Here we go. And then 5-minute chart also. Here we go. So at this point, right, we still don't have that rejection. You can kind of see that the 4-hour chart is moving upwards. You can see that the 1-hour chart is moving upwards. A lot of times that I find these advanced breakouts, a lot of times when I'm scanning my charts, making my watches, and I see this price action pattern developing on a lower time frame. That's one way to find these setups. Another way to find these setups is obviously keeping an eye out at these major levels, you know, and then seeing if there's a price action pattern. But a lot of times I'm just scanning charts and boom, a wedge develops or a triangle develops on a 1-hour time frame, and then I dig farther. Is there major support on a daily and such? So in this case, we have this triangle, you know, but price action is still developing, but you can already kind of plan it out. You can kind of say, okay, you know, if I take a trade somewhere around this area, somewhere around the highs, will I be able to get my 2% down to the 4-hour 50? Yeah, I can even push it a little bit farther, you know, if I wanted to. Will I be able to protect my stop loss above all highs? Yeah, I can protect my stop loss above all highs. You can see it's even above the 4-hour highs there. Great. Now you're waiting for the momentum. You're waiting for that rejection to happen, you know. So let's kind of fast forward on a 1-hour time frame real quick. Actually, let's do it on a 5-minute chart. Because now you're just waiting for that entry to happen. So you're waiting for momentum and volume. And you're going to be looking at all of them in unison, all of them together. And you're waiting for a strong 5-minute break. At the exact same time, you want to make sure that the 1-hour chart is giving you that confirmation. So over here, it's starting to break that 5-minute time frame. It's not really like high momentum, but you can see that that 5-minute 15-minute was being held nicely and then starting to break down at when volume is kind of starting to pop to the upside. So this is not like a lot of times we're going to have like a strong break to the downside, big volume spike. In this case, it's not there, but let's have a look at the 1-hour chart to see what the 1-hour chart is showing us at around that time. So we go up. And it's pretty much right here where the trade is happening, you know, right there. So at this point, you can already see that the 1-hour chart has decelerated and it gave you this bearish doji, you know, so you got this bearish doji. And at this point, the 5-minute 15-minute is broken. So you might already say, yeah, I'm kind of ready to go short. Let's have a look at the 4-hour chart. Okay. So now we're kind of hitting the highs there. Then we're starting to turn around. There it is. This is at this point is when the entry was happening, right at this point. So I'm looking at the charts. I'm like, okay, I like what the looks of the 4-hour candlestick. You know, sometimes you're gonna have like a beautiful reversal, like you did right here. You know, and that's great when you have that. That really helps. In this case, it's not bad. It's major resistance. I like the pattern. The only thing that could be better is maybe like a major reversal like this. But I like everything. You know, there's also a double top on a daily. So at this point, trade was taken. Everything looks good. You know, and let's see what happens. So make sure when you take that trade, right? Again, you're making sure that you can target the 4-hour 15-minute and make 2%. And sometimes I like to just target a little bit higher above it, you know, 0.382, maybe a little bit higher, and making sure my stop loss is good too, you know, so 25 pips in this case puts me nicely above the highs. I don't want to choke you don't want to choke your stop loss. So make sure you kind of put it nicely above the highs, you know. So a lot of times, sometimes you might be able to like squeeze 3% out of the position with a tighter stop loss, but to me, it's better to have a 2-to-1 and wider stop loss, you know. So let's fast forward. And we're kind of just chopping around there. You see volume kind of slow down a little bit here. But then now it's picking them back up. See volume's accelerating and the price action is moving down. It's still moving. And now it's accelerating. And boom, target hit, you know. So let's fast forward on that 1 hour chart. Do the same thing. See, now decent candlestick formation. Now we just need to break out. A lot of times it's going to happen in a way that where you get like this high test and then boom, bearish engulfing. And that's really nice when that happens. I'll show you an example of that too. This one has everything. The only thing that could be better is, like I said, better candlestick formation, right? And I'll show you examples with like beautiful candlestick formation. And here we're going. Now we broke out of the triangle, so it's confirmed. It's good to go. You know, full breakout has happened. Now we just need to hit that 4 hour 50. With this, something to note is that you always will be trading through the 1 hour 50 EMA. And you also want to be entering at the beginning of that run. A lot of times what I found when I was running live webinars is that people were entering kind of like at the bottom as it broke that 1 hour 50 EMA. That's too late because now it's already been going down for like 10 hours. So you don't want to be entering on the break of the 1 hour 50. You want to be entering at the highs. Why? Because you'll have the best reward risk ratio. You'll have the best stop placement, and the best entry. If you wait for that entering on that 1 hour break, well, now your entry is going to be looking something like this. Your stop loss, your target will be 30 pips, and well, you can't even protect your stop loss in this case. So you have to be entering at the highs. That's what's going to give you the best reward risk ratio and the best entry, stop loss, and everything in general. So let's fast forward. So that's something to remember. You will always be trading through that 1 hour 50 EMA. Okay, and now we're accelerating, and I think at this point, target was hit. Yeah, right there. Target got hit. And then 4 hour chart, same thing. So again, always trading through the 1 hour 50 and targeting the 4 hour 50. Okay, but you're playing the breakout. So after the advanced breakout happens, what's the next strategy that's going to develop is the IBO. At this point, the 1 hour chart broken down, so there might be an IBO the next day, right? And the 4 hour chart is looking good, accelerating to the downside. And now, big acceleration. At this point, target was hit because it was just a little bit higher. But eventually, if we just kind of jump back a little bit more, you'll notice that it fully kind of hit that 4 hour 50 EMA. I'm going to go a little bit farther on this 4 hour chart, and I'm going to tell you the importance of targeting that 4 hour 50. Because see, right now we're rejecting this 4 hour 50. The 4 hour 50 is pretty decent here, plus you have this ascending trend line, right? M.3 to Fibonacci. So a lot of times you're playing this 4 hour pullback. If you have like a 4 hour trend change, like a double top and then short, a little bit of a different story, right? But in this recent price action, I know there's this larger double top, but in the recent price action, this is just a pullback, So targeting that 4 hour 50 is important. If you want to push farther, because there's going to be cases where you might want to push farther, you're going to have to be keeping an eye out on this 4 hour 50. Because if you're going to notice that it's being rejected, you might want to take your 2% and then just take the CBO, if it breaks down. So you got to be watching this 4 hour 50 if you're going to be pushing it through it. But here's why it's so important. See, right now it rejected that 4 hour 50 EMA. So if I was pushing it past that 4 hour 50 as a larger position, at this point I would have taken my profit because I'm like, okay, we have deceleration, we have a 4 hour 50 EMA rejection with a low test reversal. Time to take profit because this can just go up, So let's see what happened. Price went up, formed double tops, and then eventually broke down. You see that? So that's what I mean. Sometimes you're going to be able to enter on the double tops, and that's when you can really let it ride, specifically if the higher time frames are good. And you can kind of see that I missed a lot of profit on this setup, but would I have been stopped out? No, I would have survived, but it would have been sketchy, because I still would have survived. My stop loss wouldn't have been hit here, but it would have been really sketchy because at this point, you have no idea. It's like you have no fucking clue what will happen next because, the setup already happened, the entry already happened, it already hit the ideal target, and now you're hoping. When it's going back up, at this point, you're hoping that it's going to turn back around and go in your favor. And to me, when it comes to hoping, I don't want to hope. Hoping is pretty much gambling. You have no clue what's going to happen next, and you're just sitting there holding your thumbs and just really hoping that it's going to turn around. When I find myself hoping, right away, I'm getting out of the position, because I know that the good setup already happened. My target maybe was already hit or something happened, and now I'm just hoping. If I'm just hoping that it's going to work out, I'm getting out of the position. I'm taking whatever profit I have, So I don't want to be hoping. But let's have a look at this daily chart because I missed out on a lot of profit here. So if we fast forward on a daily chart, at this point I already hit my profit target. At this point I already made 2% right there, So that's just the beginning. But you see how the higher time frames are lining up pretty well. The monthly, the weekly, the daily. You can kind of say that on the monthly chart, this is kind of like a potential wedge breakout gonna happen. A rising wedge break to the downside, head and shoulder pattern continuation. So this has potential for a longer term position. And look, at this point already would have been sitting at like 4%. And eventually continued to crash down, and this trade would have been. That's the thing. Sometimes when you're entering with these positions, they can just turn into these beautiful, massive trades, and it just continue to go down. At this point, it would be running at like 20%, probably 30%. Let's have a look. Because it never really pulled back, it just kind of continued to crash down. So maybe at the tweezer bottom here, that was, let's say 82. So let's just see how big this position was or would have been. $27%, So that's the possibility with this. It's not that you're always going to catch it. For me, it's not about the big trades. For me, it's about consistently making profit, period. Write that down. Consistently making profit. It's not about the big winners. It's not about that one big trade that you got lucky on. It's about consistently making profit. Having rules, having strategies that consistently make you profit. Not once in a while with a massive position. That's nice. When you're able to catch a big trade like that, great. But you want your strategy to consistently make profit, small amounts of profit, 2%, 2%, 2%, 2%, or 3% all the time. And not hoping that it's going to make you 27 or whatnot. So I could have targeted more, but like I said, once I rejected this 4 hour 50 MA, I would have been hoping that it's going to turn around in my favor. If there was like a double top, and I will show you an example where there was a double top, and then boom, at that point I took a massive position, so that's coming up. But that is it for this example, guys. I hope that made sense. Let's have a look at the next trade. All right, guys, so in this example, we're going to be looking at Euro Kiwi. We already looked at it in detail in the previous lesson. So for now, we're going to be focusing more on the entry, exit, and stop loss. So with that said, let's do a quick recap. So the advanced breakout, let's summarize it again. Do we have major support and resistance? So we do have major support and resistance. You zoom out, and this was a zone. We talked about it in detail in the lesson, in the previous lesson, and this is a zone because both levels, upper level and the lower level, has quite a few rejections. This is kind of at the end of the bullish trend, because if you look at the daily chart, it's been trending for a while. So what does that mean? Does it mean you're going to be targeting the highs? Chances are no, So that means a quick play, just a simple, traditional, advanced breakout up to the 4 hour 50 MA, period. So you guys already know how every single strategy has an ideal profit target level. The initial breakout, the IBO has the most ideal target is the 4 hour 50 MA on the quick plays. The CBO, the complete breakout, the most ideal target for the quick opportunities is the recent highs or the recent lows, right? For an advanced breakout, the ideal target for these quick opportunities is the 4 hour 50 MA. Okay, so does the criteria meet here? Yeah, we do have support, we do have deceleration. The only thing is it's kind of at the end of the trend, so I don't want to really push it too far, just a quick opportunity and take my profit and move on. Okay, so with that said, we need to go farther, look at the 1 hour chart to actually see if price action is decelerating, if we are at the end of the 1 hour trend. And right away you can see here that we have a beautiful price action pattern. This is a falling wedge. It is a perfect falling wedge pattern. This is what it's literally supposed to look like. We do have bullish MACD, which tells us at some point the trend is going to reverse. And then the wedge was being squeezed with a low test and exploded to the upside on volume. So yeah, this is a perfect pattern. Price action is decelerating, and we are at the end of a trend. This has been trending for way too long. So now that we're seeing this wedge develop, the deceleration, the bullish MACD, this is a really good opportunity. You know, that's exactly what we want to see. We want to make sure it's kind of at the end, it's overextended, because we don't want to be getting into it too early, into these pullback plays, right? So the next thing that we need, so now we got 2 check marks, daily support is there, deceleration, price action pattern, end of the trend, that is there on the 1 hour chart. Now, is the 4 hour chart overextended? Did the 4 hour chart drop far enough that the pullback on the 4 hour time frame is going to give us a high enough reward to risk ratio of at least 2 to 1? You know, and the answer is yes. It is overextended. The 4 hour 50 MA is far away, and taking the trade up to the 4 hour 50 and 0.38 Fibonacci is going to give us at least a reward of 2 to 1. In this case, I was able to get 2.8% out of this position. So the criteria is met. The last step was what? Momentum, high volume, candlestick formation. Making sure that you're really entering at the right time, because if you don't have the candlestick formation, if you don't have the momentum or the volume, you'll be entering potentially early, and the price action will move sideways and sideways and sideways until that volume kicks in, and at that point your price, the setup will explode in your favor, right? Once the volume kicks in. So sometimes people enter too early, sometimes I enter too early too, you know, that it would just be consolidating sideways. That's why if you're entering too early, stop placement is extremely important. You don't want to choke your position. Sometimes people, from what I found over the years of teaching this strategy, is that people sometimes put their stop losses too tight, and they enter too early, so they're not patient enough. They enter too early, and at the same time they put their stop losses too tight, and they just get topped out before it explodes to the upside. You don't want to get topped out. So patience is important with this. You know, patience is extremely important. You want to make sure everything is there before you take the trade, you know. And once you're satisfied and you have the momentum, you have the high volume, then at that point you take the trade. And I mentioned in the previous lesson, I believe, that there's a difference between high volume and low volume. I backtested this strategy and looked at every single advanced breakout I have ever taken and focused on, was it taken during high volume and was it taken during low volume? And the trades that were taken during low volume had a 50% strike rate. It still worked because of the 2 to 1 reward to risk ratio. If I was only taking a 1 to 1 trade, I would be at break even. It would be a waste of my time. But even with a 50% strike rate, trades at low volume periods still work out because you're averaging 2 to 1, right? But it's still best to execute a high volume, because what I have found is if you take it at low volume, it will just consolidate. Volume will kick in, it will spike to the downside, form a low test, kick me out of the position and explode to the upside and form a better opportunity anyway a few hours later, you know. So now I'm focusing more on literally just waiting for that volume to spike. And at that point, when the volume is spiking, that's when the best opportunity will be present. And that's how you keep your strike rate high, because you're being patient. You're literally waiting till everything's there. You're being patient. And the last thing, volume spikes, you get the reversal candlestick, and you take the 5-minute breakout to the upside, right? That's exactly what happened here. So let's jump back in time like we have been doing, and I'll quickly kind of show you the process, how it looked like just before the entry and after the entry. There it is, you know. So here we are, and at this point, you know, I'm just gonna start jumping. Yeah, let's start jumping. So on a 5-minute time frame, Let's focus on that real quick. So at this point, we can already see that volume is already starting to accelerate, you know. And when we zoom in on this 5-minute time frame, you can already see that the 5-minute 50 is holding. So it is holding pretty well. So once it breaks it, it's good to go. But at this point, we can already plan our position, you know. We know where the potential entry will be, which is just above the 5-minute 50 EMA, right? We know where potentially to place our stop loss, which is just going to be a good distance below, you know, and we know our target placement, which is going to be somewhere around that 4-hour 50. And you see, I was even targeting lower. I could have pushed this trade even farther, or what you can even do is you can always just take 2 to 1. So put it at 0.32 at 170 pips, you know, and then even widen up your stop loss if you want, and still make 2.5%. You know, for 70 pip stop loss. So sometimes it's going to give you that option where you can literally maximize your target and even widen your stop loss and still be able to get 2% or more. So whenever that comes in, I try to kind of do both. I try to have a decent target, but a little bit below, okay? And a decent stop loss, but not too wide. This way I kind of get the best of both worlds. I'm not pushing it all the way to the extremes, so that if price makes it a little bit shorter or a little bit, if price doesn't make all the way to the top, I will definitely be probably still taken out of the position, you know. So if I can still get 2 to 1 with a lesser target, you know, not all the way at the 4-hour 50, I'll choose that, you know, because it's easier for that target to be hit. And as long as that allows me to have a good stop loss, you know, so that's important. That stop loss, a good stop loss is important. And I felt like 50 pips in this case, if you look at where my cursor is on the 4-hour and the 1 hour, it's like way below, you know, it really feels way below, you know, and even like you can look at the squeeze of the triangle and kind of measure it. Even if it continues all the way to the bottom of the squeeze, my stop loss will still be kind of well below the peak of the triangle, you know. So 50 pips stop loss was definitely good enough here. So that's kind of my position. And at this point, just waiting for that entry, right? So quickly, boom, starting to break out, but I still didn't take it. At this point, I took it. High volume, nice strong break to the upside. And at this point, I went long, exactly like this. So let's have a look at the 1-hour chart at that point. So we're moving 5 minutes at a time. This is now when it's starting to pop to the upside here, okay? And there. At this point, the trade was taken long. So momentum started to kick in, that bullish lotus on a 1-hour chart developed, and now we're starting to accelerate, and boom, we get that nice pop on a 5-minute time frame, which also kind of give us that nice bullish push on that 1-hour chart. So see how clean it's kind of looking? At this point, everything's lining up beautifully. You get the momentum, you get the spike, you get the candlestick formation, and then it's starting to move. And then on the 4-hour chart, and it's coming up. And I think it was somewhere here. Yeah, around this general area. Somewhere there. That the breakout was already happening. So it's looking good. You know, on the 4-hour chart is developing a lotus reversal. So now let's fast forward all the way. And boom, you can see on a 5-minute chart it starts to explode. Now we're already running a 1% profit right there. Nice and easy. And now it's starting to consolidate a little bit, right? And at this point, I'm assuming it's kind of sitting on that 1 hour 50. It's actually above the 1 hour 50 now. So it already broke that 1 hour 50, just kind of chilling above it. And now it's exploding again. So you see that it's chilling when the volume is down, it's just moving sideways. And then once the volume starts moving up, that's when price action goes up, right? And I kind of missed that target, had a deeper pullback, but no worries there. Let's see how that pullback looked like on the 1 hour chart. So let's fast forward here. And boom, at this point it broke out. Perfect, you know, perfect breakout, looking great, no concerns at this point. And this is when I was just kind of consolidating sideways. And then boom, started to pop. And this is kind of when it started to retrace. Now what does this look like? What kind of strategy is this? Let's fast forward on the 5-minute time frame. You guys think about it. What is this starting to look like? You can see on the 4-hour chart, here it is. It's exploding, so that was that high that we just saw. And then pullback. And this is kind of how we closed. So what is this starting to look like on a 1-hour chart? It's starting to look like an IBO, right? Now the 4-hour chart doesn't have like epic price action, but it's kind of like an IBO. So let's continue going. This is going to take a while because this position went into the next day. But see how now the volume kind of died down. It's already the end of the New York session. So no worries there. You know, it's going to consolidate. This high test, not a big deal because it's at the end of the New York session. Now it's going to just be quiet till the next London session pretty much, you know. So we're going to be expecting low volume, and here we are, low volume. A little bit of a volume spike. I'm assuming that was some kind of a Kiwi, New Zealand announcement during the Asian session. Right at the beginning. Not a big deal because at this point it's still holding that 1 hour 50 MA. It's around that 1 hour 50. And then again it starts going right back up. Until finally it starts exploding sometime at London Open. Here's London Open right now. And it's still moving sideways. So see, sometimes we have a lot of sideways movement, you know, until now New York session opens up and boom, starts to explode to the upside. There we go. And target was hit. You know, so that was a lot of like sideways consolidation. We really had like 2 major runs and then a lot of sideways. So you see, the major runs, that's why high volume is important, because if you enter during this period in time, you know, anything can happen. We can all of a sudden get a spike to the downside and get knocked out of the position. So that's why entering at high volume gives you the best strike rate, at least from what I have found, because that's when you get this beautiful setup and you get the candlestick formation at high volume, well then there's a good chance it's just going to continue going up and it will put you in profit. Whereas if you enter at low volume, like early in the day or late into the day, then anything can still happen. You can still continue going down. It can knock you out of the position before volume kicks in, and at that point it explodes to the upside, you know. So that's kind of how that played out. Let's again move here on a 1 hour chart. Maybe I'll jump a little bit faster based on 30-minute candles or 30-minute intervals. Here we go. Here was that spike at the beginning of the day there, right? And then consolidates and boom, starts to explode to the upside. And then profit target was hit. Great, looking good. You know, and then 4 hour chart, let's do the same thing. Fast forward a little bit in 16-minute intervals. And then boom, target hit. Beautiful, you know, great looking trade. Now the importance of targeting that 4 hour 50 is huge because you see it went a little bit higher, but it was a pullback play, and all of a sudden later just kind of started chilling and falling back down. You know, so don't get too crazy with your targets. In my opinion, the 4 hour 50, at least for me, is like fully fine-tuned, and on these beautiful pullback plays or these quick pullback plays, 4 hour 50 is the best option. And you know, 90% of the time with advanced breakouts, I just take my profit on the 4 hour 50, take my 2% or a little bit more and move on. The next trade that I'm going to show you though, you know, that one was an interesting one. You guys already saw an example of it in the previous lesson, right? So now we're going to be focusing more on the entry, exits, and targets and the management of that position. But that was a big one. That was over an 8% move. So let's have a look at that example now. All right, guys. So let's have a look at the next example. And here we're going to be looking at the pound CAD trade that you guys saw in the previous lesson. And this is, like I said previously, one of my favorite positions that I have really ever taken. And it was one of my biggest positions too. It went for 8.4%. So that is massive. That is huge. and a really nice trade. So let's summarize it again real quick before we dig into the entry, the stop loss and the target and the management of this position. So quick summary. The difference between this one and the other two is that the other two were pullback plays. This one is with the trend. So when you're thinking of Elliott wave theory, okay, always kind of bring that back into your mind. The Elliott wave theory, wave 2 and wave 4, they're pullbacks. Wave 1, 3, and 5, they are runs playing with the trend. So whenever you have a wave 2 or a 4, that's a pullback play. That's typically going to be a quick in and out position. Okay, wave 1, wave 3, wave 5, they typically going to be a larger trades for more reward. Okay, rather than just a quick in and out. So what do we have here on the higher time frames? And then I'll kind of bring it back to that. Well, the monthly time frame, we believe that a new potential kind of move to the upside is happening. We have very good support, double bottom, and a bullish engulfing reversal. So my bias was that it's probably going to go up to the monthly 50 EMA. Do we have confirmation? The weekly chart has a triple bottom, so we do have confirmation. Triple bottom and then a break and retest of horizontal support and resistance. There it is, those previous highs. That's a full trend confirmation. Great. Daily chart, head and shoulder pattern. Left shoulder, head, breakout, higher high, higher low, right shoulder. Okay, so what is this? Wave 1, breakdown. Wave 2, pullback. Wave 3, run. Wave 4, pullback. Wave 5, run. Wave 5, finish. Wave 1, breakout. Wave 2, pullback. Wave 3, run. Right, so we're catching wave 3 run. It's not a pullback anymore, it's the run. It's a trend change. What else is this? This is an IBO-A, meaning that it's the IBO strategy, the initial breakout strategy. Everything fits perfectly, breaking retest of the daily 50 EMA, catching the daily rejection, breaking retest of the daily 50 EMA. Middle time frame, bullish bias. So the most ideal target, if you don't want to push it farther, will be the weekly 50. But look how strong the monthly chart is. The weekly 50 is nothing in comparison to the monthly bullish engulfing. Chances are that's going to break that weekly 50 and go higher eventually, So my target was more in terms of the monthly 50 EMA and this resistance on the daily time frame. Now, obviously, I didn't push it that far, right? The resistance right there, because I ended up shutting down earlier. But that's kind of the bias. So it's not a pullback play, we're trading with the trend. So the one difference is this already gives us a bias. We already know that this is a bullish bias. At this point, I'm just waiting for an entry, either an advanced breakout or an IBO or a CBO or any other strategy. I'm just waiting. So then on the lower time frame, we got the ABO, we got the advanced breakout in that same area. We got the support, then you zoom in, same support as on the weekly, daily. Then the 1 hour chart has this kind of double bottom and this squeeze to the upside. You'll notice that there's some really good candlestick formation here as well, with a double doji and this bullish engulfing lotus reversal. And at this point, I was playing the breakout to the upside, the advanced breakout to the upside. So I mentioned in the previous lesson that this isn't like the best wedge pattern or triangle pattern. Example 2 was a beautiful one, but you got to understand that the example 2 was a pullback, whereas this one has all this higher time frame confluence. This is an amazing setup on a higher time frame. So it fits a strategy, it fits the initial breakout strategy. So I can be a little bit looser on my entry criteria. I still want to make sure that it's decelerating, that it's slowing down, that it's rejecting that level, that there's volume and momentum and good candlestick formation. I still want to make sure all of that is there. But the pattern wasn't like the most amazing. But we do have the support, we do have the double bottom, we do have the deceleration, we do have the momentum. Everything is still there, so it still fits the criteria for an advanced breakout. Okay, then it comes the 4 hour time frame. 4 hour time frame has that support, but at this point you don't have to be focusing on targeting the 4 hour 50 EMA, right? Because we're trading that daily run anyway. We're not playing the pullback, we're trading that daily run. So we're going to be holding through the 4 hour 50. So my target is not the 4 hour 50 EMA at all. So I don't have to make sure that I can lock in 2%. I can just let it ride, But I still want to make sure that the 4 hour chart has some bullish confluence. And again, triple bottom, deceleration, double doji, low test, trade long. Perfect. Levels rejected, and it's giving me a bias. So now let's focus on the entry, guys. So what I'm actually going to do here is I'm going to jump right back to the entry point. So jump back on a 4-hour chart to right there. That's the entry point. A 1-hour time frame. Right there. In a 5-minute chart. Right here. So this is what it looked like exactly at the time of the entry, so at this point you can already plan it. We know that our profit target was already planned based on the higher time frames. It's not targeting the 4-hour 50. I'm targeting this level right here, which is 0.75, 1.75. That is my target. So then when I'm putting this position in, I'm figuring out what it will look like. Okay, at the break of the 5-minute 50 EMA, approximately there. Then I want to protect my stop loss nicely. I want to put it below all lows, not just kind of tight below these lows, but I wanted to protect them nicely. And so I put it below all lows, as you guys see, below the lows right there. There it is. So pretty decent stop placement. And the thing is, I have the reward risk ratio to have a good stop protection. I don't have to have a tighter stop because of my target placement. My target placement is so far up that I can have a decent stop protection as well. So I ended up going with like a 70 pip stop loss here, protected nicely, and the trade was taken long at that point. Okay, and then after that, as you guys already saw, price exploded massively to the upside. So let's actually go quickly. I want to see if I can jump more than 5 minutes at a time, but I don't think so. I can't. So I'm just going to be jumping real quick. And this is kind of what it went like, so trade was taken. And then all of a sudden we started to go up. And this one moved pretty quick. It didn't really consolidate. It wasn't indecisive or anything like that. And then boom, all of a sudden it just exploded to the upside. And after that, still continues to go up. Look at that. So this is kind of news was on our side in this case, Trade was taken and there was a news announcement a little bit later on that kind of pushed the price in our favor. And now at this point, we're sitting at about 3% profit already. This is one day, and this happens quite often, that in one day you have such a big move to the upside. Not always do you catch it, but when you catch it and it happens, it's really nice. So again, and it was also taken at high volume, volume kind of bottomed out and then the London session was happening. So this was taken right at the beginning of the London session, just when the volume started to spike to the upside, So all the criteria was met. And let's keep on going here. I wish I could really jump farther ahead, but this will take us a little bit longer than I want it. But yeah, as I'm clicking and moving this, let's just chat a little bit. And what I really wanted to say is that these kind of opportunities, be ready for them. This is utilizing a swing trade, so utilizing a strategy on the higher time frames that presents us a swing opportunity. So this is a swing opportunity executed with a day trade, but it's all the same strategies. You guys saw that the strategy on a daily time frame, that was an IBO, the initial breakout. It's simple. So when you know the strategies, you can really apply them. And a swing trader could have just taken the swing trade. But knowing all the strategies, and if you prefer to be a day trader, you can still utilize the swing analysis, and then execute as a day trade rather than a swing trade, and just let it ride as a swing position. Have more of a larger management, not a very tight management. Just let it ride. And that's how that's the only way you're going to be able to successfully catch these big plays. There's obviously other ways, and you'll catch different pullbacks for like 3 or 4%. But when it comes to like these large trades, it really does help when the higher time frames present you with a strategy as well. Sometimes it's going to be an advanced breakout. The next setup that I'm going to show you is an advanced breakout. Sometimes it's going to be an IBO or a CBO or one of the other strategies. And then if you drop down lower and look for a strategy on a lower time frame, one of them, it could be, again, like in this case, we have an IBO on a higher time frames and an advanced breakout on lower time frames. And when you find that, they're really good setups because at this point, everything is confirmed. Everything from the monthly to the 5-minute chart. Everything is fine-tuned and perfected, so it makes really good opportunities that way. And just know that they don't happen too often. So when they do present themselves, make sure that, you obviously execute. Guys, this will take me forever. I went only through 3 days here. I still got much more to go. So I'm actually just going to fast forward a little bit and then jump back in time. There we go. That's easier. So, like I said initially, I was targeting 75 level. So that 75 level that we saw on a daily time frame, that would have been a 15.5% trade. Obviously, I didn't push it that far because of the management that I applied to this position, but that's what it would have been if I pushed it all the way up to the monthly 50 EMA and this daily resistance. And it did get there, it did get that high, but first it had a massive correction, okay? The 1 hour time frame, this one I can jump a little bit faster. And the 1 hour chart also kind of exploded immediately, as you guys see, boom, and it's really nice when that happens, but it's not always that it's gonna explode this fast. Sometimes it's gonna consolidate, sometimes it will move a little bit slower, but this is again a really nice opportunity. And I found that whenever you do get a strategy as a swing trade, one of the strategies playing out as a swing opportunity, it tends to move pretty quick. It might maybe like consolidate for a day or two, but once it starts moving, it really starts moving, so it's really nice when you can find those setups and then execute them as day trades. Okay, I'm going to do the same thing here and just jump all the way forward, because otherwise this will take us forever. There we go. There we go. And then the 4 hour chart, let's just have a quick jump through that. And there it is at the entry, just kind of exploded to the upside and it continued to go up. There's that pop and boom, So again, let me jump fully forward here. There we go. So then let's talk management, let's talk exit. Because obviously I was targeting that 75 level, but I didn't exit there. I didn't exit at 75. Why? Well, it's part of my management. It's part of one of my management techniques. And we're going to talk more about management. There's 3 videos on management that we're going to be talking about. And in those 3 videos, I'll explain 3 different management styles. Short-term, long-term, and short-term aggressive. Okay? And this is more of a short-term kind of management, not a long-term management. And it's not a short-term aggressive management, but it's more of a short-term management. I'll explain that in one of those videos. But again, I exited the position when this trend line was broken, okay? And when the 1 hour chart also fully kind of broke down to the downside. Because there was a high impact news announcement coming in. I forgot which one it was, but there was a high impact news announcements coming in. And I was already at the highs, it was sitting at 10%. One thing that I hate is losing all that profit, And sometimes when you hold a position and you don't, tighten up your stop loss or you don't manage it the way you want it to, if I held this, I would have been taken out for about half that, 4% instead of 8. Again, at the highs, it was at 10. I exited the position at 8.4 and then it just crashed and I would have been taken out for about 4% because I had my stop in the general area, So management is extremely important to profit, to really making money, because you can know the strategy, you can know how to execute the strategy, but if you don't know how to manage properly, then all your money can just disappear, So that's important, but that's just how once you learn the management strategies, maybe come back to this lesson and just kind of see if you would have managed it the same way. But simple is just a simple management in this case. Trend line was broken. Before a high impact news announcement, we had some bearish MACD, so I ended up taking profit. So that's the entry here, guys. This is kind of how it went, how it played out, the entry, the stop loss, the target, and just the overall setup. And that's it for this example. I'm pretty sure we covered it all. I spent about 30 minutes already talking about this setup, 16 minutes here, and I think it was about 15 minutes in the previous lesson. So I'm pretty sure I covered it all. So with that said, guys, that's it for this example. Let's have a look at the last one, which is a swing trade. Alright guys, so in this last example, we're going to be looking at the swing trade. We already looked at this one in the previous lessons, so let's do a quick recap and then we'll focus a little bit more on the entry, target, and the stop loss. So advanced breakout as a swing trade, right? You're going to find these patterns on higher time frames as well. Doesn't matter which market it is, whether it be FX, equities, or crypto. But it's just, at the end of the day, it's just a daily trend coming to an end. That's what it is. It's the daily trend coming to an end. So when we look at this daily chart in a little bit more detail, you'll notice that we do have this wave 1 breakdown, wave 2 pullback, wave 3 run, wave 4 pullback, wave 5 run, right? Elliott wave theory tells us this has already come to an end. And then we have this price action pattern and then the breakout to the upside. You can even take it a step farther and draw your Elliott wave theory and the Fibonacci retracements and extensions, and look how perfectly it lines up, So wave 3 has pretty much hit and came close to that 1.0 level, a little bit lower. Then right here, let's mainly focus on the wave 5 run. And look how perfectly that has come to an end, right? Perfect move down to 0.618 Fibonacci, which is exactly what wave 5 is supposed to do. So that's kind of what it is. The advanced breakout is pretty much telling you that the trend has come to an end. If you're a day trader, that means the trend on a 1-hour chart has come to an end. If you're a swing trader, the trend on a daily chart has come to an end, right? That's mainly what we're focusing on. Then you're making sure that the 4-hour chart, or the weekly chart in this case, is decelerating and has room to go, and that the monthly chart is also sitting at some kind of strong support, right? And we have all of that here. We have the monthly support, we have the weekly support, which is the same level. We have the weekly deceleration. We have the weekly room to move up to the weekly 50 EMA. And we have the daily trend coming to an end with the wave 5 coming to an end, the price action pattern, the bullish MACD, the overall deceleration, right? So when you find setups like this in the market, you can execute them two ways. You can execute them as a swing trade, or you can execute them as a day trade, right? A day trader, at least the way I trade, I consider myself a day trader, and the way I trade is I look for these kind of opportunities, not just advanced breakouts, but all strategies on the higher time frames. And whenever I find them, they just mean that there are going to be some nice big opportunities. I'm going to execute a swing trade as a day trade and just let it ride, and that's kind of when you find these beautiful opportunities. That's when you can really pull more profit out of the market, because you can normally average like 3-to-1 on a decent trade. But when you find these beautiful swing opportunities and then you execute them as day trades, all of a sudden you can be making 5, 6, 7% and maybe even more, And a trade like this as a day trade is 7.5%. Exact same move, just different entry. So that's how significant these kind of patterns are, these strategies are, even as swing trades, because a swing trader can just easily execute it for 2%. A day trader can execute it for much more. So now that we kind of know the setup, let's focus a little bit on the entry here. So you guys already know that price action has kind of decelerated here. We have the price action pattern, but there's a couple ways to execute it, and it really just kind of depends on personal preference and how patient you want to be. Obviously I preach patience, that you have to be patient, but anytime really around this time period, you can already start looking for an entry long. right? Somewhere around there. And if you had kind of a better reversal candlestick, like imagine you had this lotus reversal, but over here, then at that point, to me, that's like an immediate go long pretty much. You can just kind of quickly look at the 1 hour time frame, make sure everything is good, and then right away kind of go long. In this case, we have this inside bar. So it's not like the strongest reversal. So at this point, I would definitely kind of just check the lower time frame to make sure everything is good. So let's have a quick look, because at this point, an inside bar, it's great. Overall pattern is good, but it's not as good as a bullish engulfing. The inside bar is not as good as a bullish engulfing, or it's not as good as a beautiful lotus or a tweezer bottom, So it's nice to kind of check if there's more confluence on a lower time frame. So let's have a quick look on the 5th and the 6th here. And when you zoom in, again, you'll notice that the 1 hour time frame started to, on the 5th, it started to form this higher low, right? It was still struggling to break the 1 hour 50, but then it finally kind of broke it on the 6th. But then it got a little bit tricky because we have this descending trend line. The price action was again kind of slowly trying to break, and then finally broke it end of the day on the 6th, and then when the day trade happened was the 7th. But anyway, anywhere around this time frame, you could already been going along, like maybe right here, when it kind of fully cleared that 1 hour 50, it made that higher low and then fully cleared that 1 hour 50 on the 6th. At this point, you could have already went long, so that's roughly 87.5 entry rise. And if you look at the daily time frame, 87.5, let's see how that looks. Right, that's kind of like the first time we get the confirmation. Stop loss would have been about 110 pips. Target probably a little bit lower. Right there. And that's a 3% position. Right? Nice and easy. You have that lower time frame confirmation, and that's how you take the trade. Right? So whenever you don't have like an epic reversal candlestick, definitely check the lower time frames to see if you have some bullish price action, and execute when you believe the market is ready to move, when you believe that the 1 hour chart is ready to start a new trend kind of thing. If you had a reversal candlestick, then you obviously have a little bit more confluence, like if you had a proper lotus and such. Another option is to obviously have taken it a little bit higher on the 7th, kind of like when the intraday chart broke out, so like on the 7th when it broke out, you could have kind of taken it there, but that would have been the maximum. That would have been pushing you for 2%. If you took it on the 7th there, then still would have been able to lock in 2% at that weekly 50, so it would still kind of meet that criteria. So that's kind of it. And then, so those are the swing trading options: entry, stop loss, target, right? So the stop loss, just to kind of recap, make sure the stop loss is kind of below the lows. The wider the better, but just kind of like below the lows is kind of what you're looking at. And then the target, obviously on a pullback play, the weekly 50 EMA or the 4 hour 50 EMA is kind of the best option. In this case, maybe you could have pushed it farther if you believed the monthly chart was going to go up to the highs, and let's even see what happened on this monthly chart. Did it? Right, and it did go much higher, right? So the monthly chart did go up to the highs. So if you believed at that point that the monthly chart was going to explode higher, and not just to the weekly 50, but actually much farther, like past the weekly 50 EMA, then obviously you could have taken it farther, So that's kind of when you do your analysis and when you create your overall bias, that's at that point you got to decide how far can this go, what the safest target is. Safest target will be the weekly 50, just like it is the 4 hour 50 EMA on a lower time frame, right? That is the safest target. But if you want to push it farther, sometimes there's going to be these opportunities when you're going to look at the monthly chart, or you're going to look at the daily chart if it's a swing trade. You're going to be like, yeah, this definitely has a little bit more room to go. So you might want to push it farther. But at that point, you got to be kind of still watching that weekly 50 or that 4-hour 50 in case there is a strong rejection so that you can shut down and still take your profit, right? So that's kind of it. Then the day trade, it's really powerful. I already mentioned this in the previous lesson, but it's extremely powerful when you're able to find these setups on a higher time frame and then execute them as a day trade, right? And that kind of gives you full confirmation when you're able to do that, because you can find maybe an initial breakout on a higher time frame and then execute it as an advanced breakout on a lower time frame. Or in this case, we have an advanced breakout on a higher time frame, and then we could have executed it as a CBO, a complete breakout on a lower time frame, right? And here it was. Break and retest of the 1-hour 50, 4-hour 50, 0.32 Fibonacci, stop loss at 0.618, right? And this resulted in a 7.5 reward risk ratio position. So that's what makes this type of trading so powerful, when you're able to find these kind of opportunities and then execute them as day trades, or simply, keep it easy and be a swing trader. But that's the power of day trading. So that's kind of it, guys. Again, you get a pretty good taste of advanced breakouts here. We have a couple hours worth of content here for advanced breakouts between the two lessons, part 1 and part 2. So I'm pretty sure you're going to understand it fully. But again, just all you're looking for is that trend deceleration. You want to make sure that trend has come to an end before taking that position long. Just like what we see here and what we have seen in those previous examples as well, those day trades. So that's kind of it, guys. Again, I just wanted to really say that this is it for advanced breakouts. We went through part 1 and part 2, over 2 hours worth of content here. So you should have a pretty good understanding, but also it's important to know that advanced breakouts are an advanced strategy, right? And because they are happening kind of pre-confirmation, meaning that the initial breakout has that confirmation of a trend change. Like we have an initial breakout right here that happened on a daily chart. See, it has a higher high, it has a higher low, so it has more development. The CBO has even more development than that, because it has also the break of that 4-hour 50 or the weekly 50 in this case. The advanced breakout happens first. And because it happens first, because it's pre-breakout, it's pretty much the breakout, taking the initial breakout, it's a little bit more risk, because you really want to make sure that everything is there. And the reason why it's more risk is because you don't have that full trend change, right? You're taking the breakout. So that's where really patience comes in, and it's usually best to just kind of master the beginner strategies first. Not really the beginner, because I don't want to call them the beginner, but more of the basic. We have the basic, the foundational strategies, the IBO and the CBO. They're kind of the foundational strategies. You're going to have the most opportunities with those two strategies, right? CBO being the safest one out of them all. And then we have the advanced strategies, the ABO, and then the next two that we're going to be learning next, And these are a little bit more advanced, so you might want to approach them maybe after you get good at the foundational strategies, the first two, right? And the last thing that I really wanted to say is, remember, I've learned those strategies one by one. Pretty much, I've learned one, and then maybe a year later I learned another one, and a year later I learned another one. And I just learned it because of market conditions, right? And learning from previous experiences. Like the advanced breakout, I started learning about the advanced breakout for the only reason being is that I was looking at these beautiful opportunities, and then they just kind of popped to the upside, not presenting an IBO or a CBO, right? But the higher time frames were great, and I was looking for these trades. And then when it was time to take the day trade, they never pull back for an IBO or a CBO. They just continue going. So I'm like, okay, what can I find there? Can I create a strategy around that? And that's how the advanced breakout strategy was created. So now we can take the advanced breakout as the first kind of move. But if there's nothing there, if you don't feel comfortable taking the advanced breakout, you still know that there's going to be an initial breakout coming in, and then a CBO coming in. We're just playing the trend here. That's all we're doing. So that's why these strategies are so powerful, because you can execute them all. You can take the advanced breakout, then the initial breakout, then eventually the CBO. Or if you don't feel comfortable with what the price action is telling you at that point for that advanced breakout, you can just wait for the IBO to happen. The options are there, and at this point you just kind of need to figure out what kind of trader you want to be. Here are your tools, these are the criteria, and then you just figure out how aggressive or what kind of trader you want to be. So that is it, guys, for this lesson. In the next lesson, we're going to be looking at the next strategy 4, which is another very powerful strategy, but it's not that common in the market. It's pretty much catching the wave 5, so it's waiting for that wave 4 pullback to come to an end, and then we're catching the last run, the wave 5 of the market. So the advanced breakout happens first, the initial breakout would happen second, the complete breakout would happen third, and then the advanced continuation breakout would happen fourth. So these 4 strategies, they are the strategies that are built around the trend. They're built around the Elliott wave theory, and they're pretty much built to catch the entire trend. So with these 4 strategies, once you learn strategy 4, with these four strategies, you have the whole package. And then strategy 5, which is the phase line break, is the momentum play. And with that, you literally have the whole package. All the strategies, you'll be able to catch pretty much all the moves in the market as long as the price action is clean, right? So with that said, guys, that is it for the advanced breakout lesson. I hope everything makes sense. And let's have a look at the next strategy.